want to come out at 20%. So you would have to take 20%. If something is $100, your 20%, would be $20. So you would go in and you would subtract $20 from your 100 and say, I don't want it to go under $80, and it would take you out of the trade so that you don't lose no more of your funds. So I'm going to show y'all something for the people that just joined. Yes, Bet, we are a triple threat. Somebody said me and me and Teo before Mac joined us was water and oil. Hold on, I'm gonna show y'all right now. So this is part of the group, and this is what I posted this morning. We are 10 moves away from $1 million. So if you join this weekend, you would be joining us this week in our $1 million, challenge. So I'm gonna put $1,000 on the account, and I'm gonna try to double it. This is doubling, each day. With the earnings, we have been making anywhere between 200% and 1,300% and more this week. So that's definitely possible, and you only need 10 trades to get to your $1 million. Now, as y'all know, I'm a realist. People probably saying, why we not at $1 million if you only could do that, and with the daily compounding, just take 30%. The reality of it is that, and the psychology of it, and why I started this group, is that we get greedy. My $143 in 2 days turned into $2,100 overnight, right? Now I got greedy, and I thought, not even greedy, I just thought that I knew it all, and I was stubborn, which most of us are, and we are emotional in the market, where we just like, go by our feelings and not go with actual facts. The guys in the group, Teo and they were actually bullish on Facebook. They say depends on what comes out, the news and all. I was like, there's no way. Facebook dropped, AMD dropped. We can't stop that. It does it after hours. Yes, you can lose everything. It after hours is no stop. It's like when you buy in the daytime, you can get out. You can get out. You buy in the daytime, you can get out. But when we holding these things overnight, things drop $100, and when you wake up in the morning, you're gonna be crying like, I went the wrong way. So I suggest everybody, when you plan these earnings, you do your due diligence, and if you know for sure that something is gonna go a certain way, still get the opposite. Do your strangle, do your straddle, or whatever. The straddle you can get. Mac, press the thing so I can add you. The straddle, you can get 2 separate strike prices. The strangle, you getting the same and equal on both sides, but you just know that you're gonna risk one side for the other side. But if you playing early, like Monday or Tuesday or whatever, you don't have to get rid of that contract. You can I'm joining you in right now. Went outside and got right.
Yeah, I had to go outside. But yeah, that's why we play the strangle. We played it for earnings.
What we do is rolling. We're rolling. Each day we buy. Let's say Monday we're gonna do Peloton. We're gonna ride that up, and we're gonna come out. We're gonna take our profits, and then at the end of the day, we're gonna get our strangles. We're gonna get 5 in the money. We're gonna get 5 in the money or whatever. If you get too close to the money, because if it goes the opposite way, you're gonna spend all that money, and it's gonna be uneven in the morning or whatever. Go out of the money, because these things is gonna do $10, $20 drops or moves up or whatever. If you get calls, you don't want to get. If you think that it's gonna drop, you don't want to get calls at the money, because you're gonna lose all that money. So you go 5 out, 5 in. I try to stay, and you want to see the how much it can move, in a week. You know, you don't want to go that far out. Like UPS, I know that at least it was going to give us $20, $10 to $20 or whatever. So I did that. I went at least like 10 strikes out, and we were 10 strikes in the in the morning or whatever. So what we did was UPS. What we rolled it into
Oh,
and QCOM.
yeah. It was UPS. We played UPS first, then we went AMD.
Yes, and then I rolled it the next day.
Yeah, and then you did QCOM.
I did
You did QCOM,
I did QCOM.
and then we did Ford.
Yeah, we skipping a day. We definitely skipping Wednesday. I'm like, what happened Wednesday?
Oh, what was Wednesday? I think Wednesday was Facebook, right? No, Tuesday was Facebook, wasn't it? Was Facebook Tuesday?
No, that was Wednesday.
Yeah. So it was UPS, AMD, Facebook. And when you did Facebook, you did QCOM too.
Yeah, I did AMD with what you call it. Well, I got two.
Yeah.
Yeah. Yeah. Thursday, you did something else.
I did. Well, Snap was just a last minute.
I mean, ATVI, and
yeah, I did a bunch though. I did a whole bunch. I was all over the place. I did Humana. I strangled Humana. I played a strangle on Humana. Waste Management, that one turned out to be a dub for me. Waste Management didn't do much. The side I made money on just barely got me negative from the losing side.
You have to know that move is gonna afford that other side. Because once you're on that other side, you're losing everything, and if it's not moving at all, that's what I was scared about when I got Activision.
Oh yes, ODFL. Shout out to Old Dominion Freight Line.
Was in it?
No, but ODFL was something I was in weeks before.
Yeah. I remember you calling that out, And
yeah, ODFL. Yeah, shout out to them. They made me a ton of money. I had 330 calls on ODFL. They made me a gang of money. What else?
They affordable.
Yeah, those 330 contracts they got down to about, you probably could have gone for like 50 cents. They went up to, I think, over 1,000 or right at 1,000. Mm-hmm. Because they topped out around 330, like 333, I think it was. Yeah, they topped out around there, so that was it. Like, I was good on those. And so, yeah, but my primary target for this week coming is DDOG. Gotta hit them. You gotta get them. NASDAQ stock.
Be the move of all moves.
I hope so. It may turn out to be an AMD where they don't pay out, but I'm willing to take the risk. Definitely gonna do Disney and CBS. I can't not do those two. Datadog. What's Monday? Monday for me is Amgen.
Coca-Cola.
Coca-Cola is Thursday morning, and Pepsi they both report together. So I'm kind of scared of those two because they don't move that much on average. Not really sure about Pepsi or either one of them. They may keep running up for the Super Bowl.
I'm gonna be in Coca-Cola.
Yeah, it's DDOG. It's DDOG.
I'm gonna be in Coca-Cola. It's much cheaper. Coca-Cola,
yeah,
they probably give you as much money as Ford gave us the other day.
Yeah, probably somewhere right in there.
It's gonna give way more because Disney is gonna move. Trust me, I'm eating. If Disney,
I think Disney's gonna move too. I really do. I don't think
Disney moves.
I think Disney gonna pop.
If this
Whichever way it goes, it's gonna fly.
$10, y'all, you about to make some serious money on 20 contracts. No lie, you're gonna get about $10,000. You put $1,000 on that joint.
Yeah.
I'm
gonna look at now. Now they don't. Their ATRs are under $5.
And I would say
Disney
go further out
and CVS.
on Coca-Cola and what you call it?
No, you got to stay close to the money on Coca-Cola and Pepsi.
Oh no, I didn't say out of the money. I said go further out. Update work.
Okay.
Because they have all those ads and stuff coming out, you know, the games and stuff like that. Yeah. They're gonna be good for a while. Did DraftKings ever have their earnings yet?
I don't think so. Yeah, 9% will price in.
Peloton gonna pay good.
Now, Jay, what you have to understand is that's what the options are priced for. Now, if you get a greater than expected move, right? So when you're looking at the option chain and whatever it says by that plus or minus, and I can't remember what it is, but whatever that is, that's what they're expecting to. So pretty much what they're pricing in is profit or loss total in those contracts. If you go past that move, right, you get a bigger than expected move, and that's where the money really comes in at. So if you get a greater than expected move, then that's when the market makers have to participate in the market. They have to participate in the options because the greater than expected move is going to cost them more money than what they originally planned. So now they have to be active participants in the market to make up for the side that they're getting killed on, which means whichever side is winning, they're going to exacerbate because they have to try to offset losses that they're accumulating, because now they're actually losing money. You know what I'm saying? Whether the stock is going up or it's going down, now they're losing money because now it's going down too much or it's going up too much. You know what I mean? So now they got to make up for that. So now they actively participate. Now they're buying stock or selling stock. Now they're buying calls or they're buying puts because the market is moving. The stock has moved more than what they have priced in the options for. No, not really. I haven't really made up my mind yet. Just for the ones that I can go off the top of my head, but I'm eyeing is Amgen on Monday, XPO Logistics on Tuesday, maybe another one in there on Tuesday. I can't remember. Wednesday is CVS and Disney. Thursday is Datadog for me. And that's probably
he's in your group. Why not?
No, I think I think he's in Kev's group. There's some people in here from Kev's group.
You trying to get all the info. You need to join the group. You need to join the group because you're trying to get a lot of information. Join the group and get these tickers every day. You don't have to go through all of that. So you're expecting a 9% move on the strike price, which would yield 400 cents.
Nah, you just have to go off with the market makers. Market makers are like Vegas. Market makers are like Vegas. They're rarely wrong. So if what the house is betting on, you know what I'm saying? He said drop the link.
It's for the Discord?
Yeah, for yours, yeah.
The Discord would be an invite. They have to pay to join and then they get the link or whatever, because once they follow that link they're gonna be in the group. So it's like
she said send the cash, homie. She said send the cash.
Everything is in my bio. If y'all look at my page, y'all see how much I charge and what you're getting for your money or whatever. So
she said send it.
I charge because my work. When I started the group, I started with $250 or whatever. Charging them $250, and then I see you know, other groups charging like $50 a month or whatever. I'm not doing a monthly price. Y'all stuck with me for a fucking year. I don't want to do this next month. Ain't none of that shit. It's one-time fee, and you're stuck with us. You're gonna love it here.
Stuck.
Love it here. I go live. First of all, we have a call-out channel where we get in giving all the call-outs. We tell them when to get in. We telling you when to get out. We holding your hand. We have a learning channel where my community drop things that they pay thousands of dollars for, these courses and stuff like that. We have a learning channel where you can take your courses or whatever. You have this guy here that's teaching our Zooms or whatever. So if you join, you're going to get him, you're going to get me, you're going to get Taya or whatever. They're master traders, they're master charters, and my eye. Doesn't matter what nobody else thinks.
Thank you.
Going to run out, he's going to teach us how to do fibs. So last week he taught us how to do the strat. This week he's going to teach us, and he gives a lot of information, like 3 hours long. We talk. We ain't going to just...
We talk. We definitely talk.
Oh, join the group or whatever. We really trying to get our blacks to make this money. It's not about joining and doing all the other stuff. We're trying to build this community because it's not just a call-out group or whatever. It's a community. We love each other dearly. We call each other. So now what I did last week, I had each other team up with people that were in their cities or whatever, in their states, in their country or whatever, and I had them call them because there's no child left behind, no adult left behind. You see how they have no child left behind? It's no adult left behind. Somebody joined, we all on that person telling them what to buy, like LOD or whatever. She wants to learn. You know, we tell certain things. She be like, oh, you know, soft, sweet voice, African, my little African friend or whatever. I have a lot of African.
Yeah, she's nice. She's real nice.
She really wants to learn. I can tell people that want to join, want to learn, because when they first join, they asking the valid questions. They ain't asking all that, when I'm going to make my million and all the other stuff. She's asking, you know, what's fibs? How do I buy this? How do I buy that? What, you know, what brokerage? What's the best one to join or whatever? She texts me every night. What we getting into? Because she wants to know. Because some people join and they'll still take call-outs. Some people join and they'll take call-outs from like other groups and stuff, and then come back when they clapped or whatever. I would say I give great call-outs or whatever, and you can check the track history or whatever. Sometimes, like I tell people near the thing, if you buy calls, I tell people try not to stay in no longer than 10, because makers is definitely not going to keep the market up. You know,
yeah, y'all gotta know when to quit, because she don't be knowing when to quit. So y'all can't do what she do. She don't know when to quit.
My risk management is different than y'all.
Yeah, her risk management is horrible. That's her only flaw. Her call outs are fire. She just don't know when to stop.
I don't tell y'all what to do. I don't tell y'all to do what I do. I'll let y'all know. I'm staying a little longer than y'all, because if anybody gonna go, I'm gonna go first or whatever. So I can tell y'all, get out right now, take your money. He's advising y'all, listen, this is a reversal candle. Get out. Him or Teo telling y'all to get out or whatever. I say, listen, I'm going to stay in a little longer. I have my contracts out a little longer, or if I want to be greedy or whatever, that's me that's going to take that loss. But I normally tell you, get out. Get out. So this group, we're really holding your hand. If you're new to trading, we're teaching you how to trade. You know, it's going to take some time, because people that have Twitter spaces and stuff like that, and they're Google, they in each other's Twitter spaces, learning new things on the market, you know, from each other or whatever. We all don't know everything, so we're learning. I built this community so we can learn from each other. And the first person that I added was him. You know, he taught me.
Yeah.
He have his you have a course. Yeah, he has a course coming out, and you know, he's gonna do YouTube and all the other stuff. So we like a great team, whatever. He teaches.
Yeah. We just chill, and we, like you said, we laugh, make a little money, and that's the day for us for the most part. You know, like it's pretty dope. I mean, it's pretty dope.
I go live on The Voice. We go live on The Voice, and it's like a podcast. So,
Yeah, it's a party in there. It's definitely a party in there.
or hearing us or whatever. Sometimes Theo will share his screen, but you actually seeing us, um, hearing us or whatever into trades, exit trades. We're looking down our watch list, trying to find new things. After we come out of the trades in the daytime, we're looking for something fresh to buy. You know, like.
Yeah. And we got the Zoom. We got the Zoom tomorrow where we really gonna dig in. So
He's teaching Fibonacci.
now's the perfect time for y'all to join. You know, we're doing the Zoom tomorrow.
He's teaching charting or whatever. So if any time to join is now. So he's gonna teach because we're not gonna keep going over these same chartings or whatever because we spent like at least a month on support and resistance. I said if they don't know right now, you gotta get it from the learning channel. But we all gonna be on that Zoom. If y'all would like to join the group or whatever, inbox me or whatever. It's $350 for the whole year. You're gonna make that back tomorrow.
Bang bang, bang bang.
Why we doing earnings is because these earnings plays is giving 1,000%. Where you getting that at? 1,000%. You turning your $100, 1,000% is times 10. It's just times 10. Don't think of you making $1 million. No, it's just times 10 or whatever. You putting $100 in, you're making 1,000. You waking up to 1,000. No lie, I just did it. You know, woke up to 2,000 with mine. So what we doing is we're buying things that day, like closing or whatever. We're buying both sides. We're riding it in the morning. We're cashing out on the one that's all the way up, and we're holding the one that's all the way down because it's worthless. You might as well just hold it until it come up. You know, we're stalking our next move. Now this is Monday. When Tuesday come, we're already gonna have our money from Peloton, right? We're gonna swing that money from Peloton into CVS or what's the other one? Coca-Cola.
CDS, Walt Disney.
Coca-Cola. Walt Disney is later on in the week. I'm talking about for Wednesday.
No. CVS and Walt Disney is before Coke and Pepsi.
I'm gonna tell you right now. I'm gonna look at the calendar.
I'm looking at it.
Okay, I'm sorry.
Yeah, I'm looking at it.
Okay, so I'm gonna show them the calendar.
Yeah, CBS is Wednesday morning. Walt Disney's Wednesday night.
So this is the calendar we're talking about. This is the earnings calendar. So if y'all can see, hold on, let me wipe my camera off.
Yeah, it's going down.
Okay. So here we go. Let it zoom in first. I don't know why it's not zooming.
Yeah, we got Lyft too. Can't forget about them.
So what we're gonna do is we could probably play Chag or whatever Monday. But by Tuesday, Lyft is there. He said, you don't like Spirit? We got BP, so that's probably gonna cause all the gas to move with it for the sympathy plays. If y'all cannot afford the actual play, you would get like a sympathy play. So Lyft is gonna be running, and Uber is also gonna be probably running with it. BP is gonna be running. You're gonna see is that Pfizer right there? Hold on, that is Pfizer. Pfizer.
Yep.
Tuesday.
Mm-hmm. Yep. Tuesday.
This is Pfizer right here. If y'all can see it at top.
Yeah, Tuesday before the bell.
So we're gonna swing whatever Monday into Tuesday. Then you're gonna have Pfizer. You're gonna have Lyft. Tuesday you can play Spirit. That probably move the airlines or whatever. Then we're gonna swing whatever the earnings we made. We probably be up from $1,000. We'll probably be up 2-3. I'm gonna give you. I ain't gonna go too far. I'll give you 100% on yours. You know, take your 1,000 to 2,000 that day. That's Tuesday. Then Wednesday you have CVS, and Uber. Uber and Lyft is probably gonna run both days because one's gonna be in sympathy for the other one. Let's see. We have, and that's Tuesday and Wednesday. Oh, we got Honda. Sorry.
Uh-huh.
We have Honda. Wednesday.
Chipotle for all the heavy hitters out there. Yeah, definitely Chipotle for all the heavy hitters out there.
I'm gonna read off the rest of this phone and cooperate. All right, so we're gonna start all over again. We got check Monday or whatever. I don't see anything else. And Simon, we're gonna swing that money. We starting with 1,000. We're gonna swing that money. Let's say we got 2,000. We're gonna swing that 2,000 into like Peloton and Lyft. I'm not messing with Pfizer. Pfizer clap people and Chipotle if you can afford it. Chipotle gonna be super expensive. You probably even gonna have to look at that. You probably
definitely will.
$100 out of the money to be able to afford Chipotle. Don't ask me why it's a $3,000 stock, but that shit is crazy. We're gonna swing that $2,000 or $3,000, however much you made or whatever, and willing to risk. We're gonna swing that into Wednesday. Wednesday earnings. We got CVS. We got Honda. We have a Mattel Toys. Zynga might be a good one too. That's a very small account play. We got Twilo. We got Uber and Walt Disney. That's so many small account friendly things. You just pick 2 or 3, buy both sides. We'll be at 2,000-3,000 by then, or whatever. That's Wednesday. You'll be at about 5,000 by Wednesday. We're gonna swing that 5,000 into Coca-Cola, Pepsi, D-Dog, Twitter. God, why all the good shit be on Thursdays like last?
I don't know, but there's a Thursday is loaded.
Playing.
Thursday is loaded.
Affirm, Pepsi, Coca-Cola, I'm definitely playing. Might get into Data Dog. I'm definitely playing. I'm going to have $5,000 on it, so.
Yeah, Thursday is loaded.
By then, with all those plays, you should be at 10,000 by then. You should be at 10,000 by Thursday. If all goes well, because you're doubling. You know, you're doubling your money. 10,000
Definitely doubling.
10,000 by Thursday. Now we swinging those Thursdays plays. That 10,000 into I don't see nothing Friday. They got Under Armour. That
you got Under Armour. You got Under Armour.
You only need to play that. You only need one thing. One thing. We ain't gonna go crazy. But some things that we played on Coca-Cola and all of them, you're already going to be in Thursday. They're going to report after hours, so we already going to be in that for Friday. So that's going to be your Friday money, that 10,000 or whatever. You can just let it ride out for the day, because those probably just keep going. If it goes against you, you're going to come out and probably get puts on them same things that you made money on the way up or down. You're going to get puts or calls. Then you're going to swing it, your 10,000 or whatever, into Under Armour or eBay. I usually play eBay on Fridays. It usually give me like 200-300%, sometimes 500% if I play it from the day before. So we take in $1,000 this week coming, and we accepting no more than $10,000 by the end of the week.
Gotta have it.
On God.
Gotta have it.
That's on God.
Gotta have it.
For double. That's just with doubling your money, and these things are going up 1,000%. I only gave you double. That's one time.
Gotta have it.
All right, let me look at the calendar again.
It's very doable. Not like it's not doable. It's very doable.
And what you're doing is you're not risking everything. You're not risking everything. What you do is take 20 or 30% out. Don't risk your whole 10,000. And what I'm saying is, I'm a realist, so I'm telling y'all, I lost maybe $100,000 this year, right?
Almost.
And made about 500,000. No lie, give or take. You know, if people say, "Oh, why you not at $1 million yet? Why you not?" It'll come. I'm not worried. I'm not pressed or whatever. I lost a lot of money, and if you see on the market, if y'all follow certain people or whatever, you see that a lot of the gurus that we follow lost 100 million, this million, that million, whatever. So whatever I will lose $200 we losing ain't shit compared to what those big dogs are really losing or whatever. It just it comforts you to know that people that know way more than you or in charting. They've been trading for 20 years or whatever. They lost on their Bitcoin, all their the stocks that they have, and this is why I'm a what they call it, unconventional trader, because I don't do leads. I don't believe.
Yeah, me neither.
I don't believe holding. I'm a momentum trader, meaning stuff. I want stuff to move. It gotta move. I'm not. If I'm in something and it's not moving for the whole day, guess who's coming out? By 10. I'm like, this is not moving. This is not for me. I need to see some kind of movement. I'm running a group. We need to see some kind of movement. People got kids crying in the background. They gotta feed their kids. Everybody got babies. They gotta feed their kids. So we need stuff to move every single day.
That's right.
People
Every
that
day.
buy regular stocks and they sitting on it. I called my cousin. She said she down 60% on her regular stocks. You know, when the market, guess what? Guess who's gonna have no money? Those people that's holding regular stocks. Us that's in options. Guess what? We can trade the other way. When you're in regular stocks, you just gotta take that L. You know, with options, it's a lot of money to be made, but it's a lot of money to be lost also. So to avoid all of that, only trade like 20% of your account and put a 20% stop loss. You know, as you start going over $1,000, $5,000, $10,000, you want to shrink your stop loss to maybe 10%.
No. You keep it the same.
You think I'm making $10,000 trying to risk 20%? I'm not keeping it there. No, I'm shrinking my shit.
You'll get stopped out every time on 10%.
That's fine. That's fine.
You would just give money away. You can't do a 10% stop loss. You can't. You get triggered. Your stop would get triggered all the time. Unless you were playing it as if you were chasing. You would have to wait for the run to actually happen. Because if you got caught in a chop, you're gonna get stopped out at 10%.
What I'm saying is,
You're gonna get stopped.
you playing a whole lot of money, you don't wanna risk. Let's say you're playing $20,000 on a trade on a large account. You already 20% is that. That's a loss. You're not getting that back or whatever. So you're getting stomped out on that anyway. Shit, if it went 10, it's definitely going 20% down. So
yeah, but if you lost 2,000 on a trade and you put another 10 up, and you make 60%, that's 6,000.
That trade. We already getting to going to something else. I lost on
That's
that.
what I'm saying. On the next trade. That's what I'm saying. The next trade will make up for it.
But listen, it's all on y'all how much y'all willing to lose or whatever. And when you want them to take you out of the trade, you can do 5, 10, 20%. But it's suggested that you do 20%. And I've seen people that move up. Let's say they make 100,000 or whatever. They definitely not risking 20%. You know, they're moving it or whatever. He wants to keep his there. He can keep his there. They're totally up to the person where they want to move theirs to, and how much risk loss, you know, you want to take.
No, if you're talking about the more money you make than putting up.
That's what I said.
And not, putting up less. But you said stop loss. When you said stop loss, that's what made me look like, oh shit, no, you don't want a 10% stop loss. You'll get triggered.
No, I know.
Now, if
what I'm saying.
you made 10 grand, then yeah, you probably only want to put up 1,000 or 2 at a time. Yeah, I agree with that.
Talking about how much risk, because some people really be throwing their whole account at it and they can't risk taking, 20% loss or whatever. Because I'm a realist. I know that all right, let's start off with what I was about to say before we got cut off the line. What's going to happen is that we become cocky with the compounding also, and that's how a lot of people get clapped.
Yeah.
Let's say I made $10,000 last week off the $100, right?
Right.
At some point in time, I got cocky, and that's about the middle of the week. So when you're trading, you making all this money, right? By the time Wednesday comes and you turn your 1,000 into 5,000 or 8,000, however much you at Wednesday, you're gonna get cocky. You started with 1,000 and you say, "Oh, I was ready to lose that anyway." And it's like, the psychological part about it is that you're gonna get greedy and you're gonna want more contracts now.
But that's just where the discipline comes in.
Right. It's not totally bad, But whatever you're gonna swing your play into, just make sure you do calls, you do puts.
Yeah, yeah.
Don't be
Just stay
concerned and
stay
just get
even
one
on both sides.
in your whole account. Because I know what people do. I don't say, oh, don't do this, don't do that, or whatever like that. I give y'all the scenarios. Now, if you have, now if you make it to 5,000 by Wednesday, I would say only risk like 1 to 2,000 or whatever. Let that other one sit there or whatever. So, and so if you cash out, you're not having day trades. You're not having padding. What you get the good faith violation. You're not getting none of that because you still have a balance there. You still have money in your buying power, or whatever. Now, if you use your whole buying power, guess what? You're only gonna be able to sell once. That's gonna go back, and then you're only gonna be able, it's gonna go back into your available thing, and then you're gonna be able to trade the next day with it. So to avoid your pattern day getting marked as a pattern day trade, which you get 3 in a week, if you don't have more than 25,000 in your account, I would say don't play with more than what you call it. Once you get to your 10,000 mark or whatever, risk 2,000, and just keep flipping that, keep playing with that or whatever. What I've noticed is that I lost the most money. The more money you make, the more money you could possibly lose because you start getting greedy and you start throwing more contracts at it and um, you start going out there, and buying like you some master trader or whatever. Oh, let me buy 50 contracts. I was doing that, 100 contracts or whatever. It worked in my favor. But what happens is you want to stay in a little longer because you start seeing that money. With 100 contracts, something move $1. You seeing you
Yeah,
20,000. You're like, oh shit, let me stand a little longer. You're being greedy. Take yourself out of that trade.
yeah.
Take yourself out of the trade. I'm gonna use Pfizer for example. Pfizer gave, I took over someone's account because I do that occasionally. I run, accounts or whatever.
He's braver than me. I'll tell you that.
So he started with 105,000 or whatever, and that second day I made 36,000 on
Uh
one.
huh.
I think he had like 200 contracts or whatever. 36,000 on it. It's in my profile. On it. Then the third day, we still had Pfizer because Pfizer didn't move the whole year. So I said, if this broke out, it
Right,
could
it was gonna go.
I said it's gonna keep going or whatever. So I was on one. I said, all right, I'm gonna swing this to the next day. I swung it to the next day. It just kept giving. I zoomed out to the 1 year. I zoomed out to the 5. It didn't give me no indication to get out. I kept it matter of fact, I kept it Monday, Tuesday, Wednesday. Wednesday came. I made 50,000, 50 something thousand on that. So now I took his account from 106,000 to 170,000, right? So we don't ask me what kind of crack I was smoking. And the next day, um, was Friday. I said, "Oh, they coming out with a new pill." So I asked the guy. I said, "Do you want to swing?" He was like, "Yeah, they coming out with a new pill or whatever. We've been good all week or whatever. We didn't think that was gonna drop. It only dropped $1. That's how much it took." We had 350 contracts by then. I think it took like the whole 70,000 back, or at least 50.
Oof.
That's how you can lose, money. So he's still rocking out with me though. I said, I love you for rocking out with me still. But at the
He's still rocking. Yeah,
end,
he's still rocking out with.
say he's still loyal or whatever like that. And then February came, it just been losing, losing, losing. So now when we doing this, we only playing options. We said, fuck that shit. Because when you in regular trades, they're not giving that much during the day because they doing rug pulls. You know, the chances of you staying in a trade all day, making money all day is probably like 60 or whatever, right about now. What we do,
Yeah,
we trade from 9:30. We time our exit. I mean our entries or whatever, because we already know that the market is more volatile when the market first moves up. So you're gonna be paying more for contracts. So I would say break like 10 minutes before you get it. If you want to be greedy and you jump right in, that's on you or whatever. I would say wait till the market gives you a direction. You know, once it go up, what goes up must come down or whatever. And I say put your things hold on, I need some chapstick. Put your charts on the 5 day, 5 minute for your entry. And once it come back down to you, you will wait your third candle. You can wait 5 candles or whatever on the 5 minute. You wait till it goes back up, and then that will be your entry. A lot of people, and that's simple. Everybody think trading is so hard or whatever. You get that perfect entry, and you ride it up by 10 o'clock. Guess what? You have 100%. 200%, and I'm a penny pincher. I like to play things like Neo. I like to play things like Ford, Snap, stuff like that. That's going to give me maximum profit for pennies. I thought it was like 19 cents that I got in for. Before earnings even came up, on the night before, I was already up 100%. And then the next day gave us a couple of 100% the next day or whatever. If you stayed in, Ford stayed down the whole fucking day.
All day.
Could have been green.
All day.
Just knew for sure. If you got your charts up and you zoomed out to the 5 year, you knew that next level, it was nothing in between that 19th that it was at or that 20 the day before and $17. So we knew when the market opened up to stay that long, we moved to stay to that shit got to $17, and it got to like $17.50 or whatever. But with that $2 drop, we got hundreds of percent or whatever.
Yeah, we got paid.
But
we got paid off of Ford.
They ain't letting Ford go no lower than that. They ain't letting.
Yeah, Ford paid the bills. Ford definitely paid the bills on Friday.
Their earnings should have been Tuesday. And we can swing all that money into something else.
Ford paid the bills on Friday.
If y'all thought that last week gave money, this week is going to give way more. Why? Because these are small account friendly ones. When you get into CVS, when you get into now Peloton might not be too affordable, but if you go out the money, you're going to make it back. They definitely going to move like $20, between $10 and $20 with the news that's coming. Is either they're gonna push it all the way up, and we're gonna ride it up, and then, or if they push it down, they're gonna wipe out all those profits from Friday when it went up and Monday or whatever. So we definitely jumping in Peloton, both ways or whatever. I don't give a fuck about the company, what it's gonna do after I'm out. I'm buying both sides. We're buying both sides. My group is buying both sides because they listen. It works. It works for us. So why wouldn't we keep doing it?
Gotta keep doing it.
And every week we're gonna put out the earnings plays because where could you trade where you're gonna get 1,000% every time or whatever? The best time to do it is during earnings or whatever, and they report these companies. You're not only getting it one time a year. You're getting it every quarter. So if you saw Facebook do that shit, $100 drop this quarter, you better look for that next quarter to get your ass in. Get your ass in and play both sides or whatever. We don't know what their projection is going to be next time or whatever. But if it's for another 100, and the next couple of months or whatever, we're going to be good. We're going to be good.
That's a fact.
I would say the one that probably gives the most money where you can get a lot of contracts for, it would probably be like Coca-Cola and Pepsi, because they're dirt cheap. So when they move, let's say they make like a $10 move on their earnings, we're gonna be up thousands of percent, and that's in the middle of the week. You ain't gotta worry about the data from Monday, because Monday is just like dead. Sometimes Monday be dead like so we just plotting our entries on Monday for Tuesday's earnings or whatever. But Monday looking like a continuation of Friday. Everything they don't give what they're supposed to give. So them Tuesday plays and Wednesday plays, they give maximums. By Thursday, the data is eating up on these things, and they not giving what they really supposed to give unless that stock moved a whole lot or whatever. But Tuesday, Wednesday, and Thursday, we on one.
Yeah, facts.
We definitely know. I cannot wait. He has his thing. He's doing, for y'all that just joined, we do our Zooms on the weekends also. So when you join the course, you're gonna be getting free Zooms every weekend or whatever. We discussing different things. We be on the Zoom for like 3-4 hours. He give you everything he know. He don't hold back, on nothing or whatever.
Yeah, we definitely got a big week to talk about tomorrow. That's a fact. We got a big week to go over tomorrow. That's for sure. That's for sure.
I didn't swing anything. I'm talking to Jay. I didn't swing anything or whatever because I wanted all my funds to be available for Monday when I enter these Tuesday trades or whatever.
Oh, he's brave. He swung over the weekend. I like him. He's brave. Shout out to you.
I don't do that with Peloton or whatever, but something just told me not to get in yet or whatever. That was a dumb move, but I'm definitely chasing. Remember you said, you chasing? I was offended. I was like, what you mean chasing? I'm getting in that open.
You chasing?
I was
you chasing. Yeah.
If you buy a stock in the morning.
Oh, we got into a whole argument about that. You was upset. Oh, you was upset. Oh, you were so mad with me.
I'm chasing. What do you mean I'm chasing?
She was offended, y'all. She was highly offended.
Apparently.
Yeah, it's okay.
Why you said we chasing?
Because the move is already taken off without you.
Pre-market.
Yeah. Yeah, but see, the argument was for stocks that have earnings in the morning. He was like, I can wait and see what it do.
First thing in the morning.
And then jump in it first thing in the morning. And I'm like, well, if it's already running, then you'll be chasing.
I'm not chasing.
Yeah,
I'm getting in.
You will be chasing. Technically, you will be chasing the move. You're chasing the move. You know what I'm saying? Because if it makes the move, that's the reason why you're chasing it. If it's flat, you're not gonna get in it. It's not gonna catch your attention. If the shit ran up or shot down, you be like, oh, this shit moving.
It dropped.
Like, okay, yeah, you chasing it. I'm chasing it.
But I only consider chasing after the market opens up.
But I mean, don't get me wrong. I mean, that's why I was saying.
But that's the only thing you can do because all these things be up.
Right, because if it's moving, you're gonna have to. If it's moving, wherever it's moving for earnings, it's not gonna stop. You're probably not gonna get a chance to get in. So you're gonna have to market order as soon as the bell rings, or try to get a limit order in.
What you really
as soon as the bell rings.
What I did one time, you don't want to average up. You don't want to average up. So averaging up is you end a trade and you're winning and you want to add more to it. Your average is going to be the new price. They're going to average it out towards the new price. And if that stock tanks, you're going to be losing money really fast. Now, if you want to...
I think it's okay. If I would say yes and no. And there's always a caveat to everything.
Mm-hmm.
It's okay, if you bought 20 contracts before it started running,
right?
And you added on maybe one or two as it went up, that's okay.
It won't change it that much. But if you're trying to get equal amounts, you bought 10 and you're trying to add.
Yeah, you bought 10, now you're buying 10 more.
It's gonna change your average, and as it comes down,
you're playing a dangerous game.
On that new average or whatever, you're gonna be losing as it comes down or whatever. You're going to be losing all that average that you made. Let's say you up 100%, and you try to add 10 more contracts or whatever. As that thing come down, it's going to reflect on that new average. So you're going to be, not that close anymore or whatever. Now, what you do want to do is, if you swinging something, like he said he swung something from the weekend, if it don't go in his favor, and he down $10 on each contract, you can average down. You want to average down, get that new average course. So when it comes up, you will ride it from the bottom all the way up. So you can average down. Don't ever average up. What you want to do, if you want to add to your position, get the strike under it and buy 10 more of those or however many you want to buy those. Don't add to your position while it's all the way up or whatever. Or what you could do is, you up 100%. You should be cashing out anyway. You cash out and then you could possibly get back in on the dip. The dips, woo! The dips
Mm-hmm.
Whoever caught that Amazon, Spotify, whatever dip. So the dips are stocks go up, they come down or whatever. When they go up, you take your profit, is what I teach them. Take your profit, and as it coming back down, you re-enter. Now remember you got your 5 minute, 5 day on, you would do the same exact thing with your entry. But now you already made your 100% and it came way back down. You're re-entering for a cheaper price now, and you're riding it all the way back up again. So now this is your second double, you know. So if it get
Mm-hmm.
back up to where it was at before, now you up another 100%. So that's why I be saying, like, if the brokerage you on allow you to sell, you know, on that certain security and get back in, I would say, do it or whatever. But Mac, you have something to say?
No, that's it for me. I'm about to get out of here because we got a long day tomorrow. So.
It probably cut us off soon anyway. I'll stay on to about 5. Do you have any